Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Several subscribers asked me to make a stock analysis video about Shopify because Shopify was one of the best performing stocks in the past 1 and 2 years. For example, Shopify stock increased 104.58% in the past 12 months, as well as 447.21% in the past 24 months. But recently, Shopify stock did drop as much as 18.06% between its recent peak on February 16, 2021 and its closing price on April 16, 2021. Now, past performance does not guarantee future returns, so it's very important that we all do our own research and do our own due diligence first. Here are some of the very important questions many of us ask. First, does Shopify still have great long-term business prospects? Second, is Shopify stock still a buy? And third, is Shopify stock undervalued, fairly valued, or still overvalued right now? I will answer these questions in this video, and I will cover these topics in this video. First, I'm going to talk about what is Shopify's business model. Second, I will talk about Shopify versus Amazon. Who is winning right now? Third, I'm going to talk about Shopify's 3 growth catalysts. Then I will talk about Shopify's 3 risks that we should consider. Then before the end of the video, I'm going to talk about Shopify's intrinsic value calculation, so we will know whether Shopify is currently undervalued, fairly valued, or overvalued right now. Then I'm going to talk about, am I buying Shopify stock? If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week that will help you become a great investor. Let's start. So what is Shopify's business model? Shopify's business model is very different from Amazon. Shopify is not an online retailer and it's not an online marketplace. Shopify adopts a direct-to-consumer business model. Shopify's focus is to help merchants and brands to sell their products directly to customers online, skipping the middlemen such as retailers and wholesalers. Many merchants and brands use Shopify platform because they want to start selling their products online very quickly without hiring developers to make their online store. Also, merchants pay a very low subscription fee to start, ranging from $29 per month to $299 per month for small and medium-sized businesses. For large businesses and large brands, they typically pay $2,000 plus per month using the Shopify Plus plan. Shopify also provides greater control over inventory and have much greater control over customer relationships. Shopify is known for its drop shipping services using third-party suppliers. One of Shopify's biggest competitive advantage is allowing merchants to sell products through multiple sales and marketing channels, including Facebook, Instagram, Google, Pinterest, Walmart, and even TikTok now. Shopify has 2 main revenue sources. First, subscription revenues. Typically, small and medium-sized merchants or brands pay ranging from $29 per month to $299 per month. For large businesses and large brands, they often pay over $2,000 per month. The second main revenue source is merchant solution revenues, meaning fees generated from Shopify payments, Shopify shipping and fulfillment services, and Shopify Capital. Shopify's business model is very different from Amazon. Amazon runs the biggest online retail store and marketplace in the US. Amazon's online retail store is a search engine that allows you to find products online that you're interested in. How Shopify works is that Shopify merchants use social media such as Facebook, Instagram, and Google to market their products online. This is what we call social commerce. Shopify works very well for entrepreneurs as well as small-sized and medium-sized businesses because of how easy it is to set up an online store and because of the much smaller upfront cost to set up stores. Shopify versus Amazon. Who is winning right now? Let me show you this video from Bloomberg. This is what Kathy Wood said about Shopify.
Yes, Shopify is in our top 10 in the flagship fund. We're very excited about social e-commerce. Shopify is one of the biggest and most important plays on social commerce. Much better play than Amazon. We're trying to figure out how Amazon is going to deal with this notion of individuals seeing something on Instagram or elsewhere on Facebook or on Twitter or on Snap and just buying there. That's a Shopify-enabled commerce opportunity, and we think it's going to be big. We see, of course, TikTok doing the same thing, lining up with Walmart. So we think it's going to be a pretty explosive space. We know Shopify is a very expensive stock, but because of these viral networking opportunities around commerce, we think it's the most exciting one probably out there, because Shopify doesn't care who wins. It's going to be involved with many, if not most, of all of the sites that are going to be powering up commerce.
It's interesting you bring up Amazon, because every day becomes more and more apparent that these two are rivals, although Shopify used to go to great pains to kind of separate itself. Do you think there is a day where Amazon really views Shopify as a huge competitor? Do you think it could grow to the size and scale of an Amazon?
We do. And I think the question will become for Amazon, if social commerce is going to continue to take share from e-commerce, what is Amazon going to do to insinuate itself into this business? It doesn't have a social network itself. It would have to be more on the back end, again, fulfillment by Amazon and so forth. I think what will happen is Amazon, and Jeff Bezos has always said that he thinks AWS could be as big as retail. But what he doesn't say is that AWS, so Amazon Web Services, which is a technology platform, is going to be so much more profitable than retail. So Amazon and Shopify will probably, I don't think they'll be meeting eye to eye.
If you look at this here, it compares Shopify's market share with Amazon's market share in the US. Amazon is the largest e-commerce company in the US with a market share of 39%. Shopify is the second largest e-commerce company in the US with a market share of 8.6%. This is from eMarketer. If you look at this article here, you can see that US e-commerce as a percentage of total retail sales are expected to grow going forward. This means that it will benefit the largest e-commerce players, including Amazon and Shopify in the US. Now, during the pandemic, Shopify has gained a lot of new merchants, especially small-sized and medium-sized merchants, who were forced to shift their sales from brick-and-mortar retail stores to online retail stores. Now, Shopify does not compete with Amazon's business directly, but I will talk about this later on in this video. Shopify's first growth catalyst is the e-commerce growth in the US and worldwide. Let me show you this US e-commerce penetration article here. You can see that the US e-commerce sales as a percentage of total sales have been increasing steadily every year between 2010 and 2020. Right now, Shopify is benefiting from the increasing number of merchants moving to online stores and selling things online. So if you look at this 5 years revenue growth chart right here, Shopify's revenue grew at a compound annual growth rate of 65.63% each year between 2016 and 2020. Now, Shopify's 2020 revenue growth was exceptional. Shopify had a revenue growth of 86% in 2020 because of the COVID-19 pandemic. But excluding Shopify's revenue growth in 2020, Shopify's revenue was growing at a compound annual growth rate of 59.45% each year between 2016 and 2019. This is from the Q4 2020 earnings call. Total revenue for the full year 2020 was $2,929.5 million, an 86% increase over 2019. Within this, subscription solutions revenue grew 41% to $908.8 million, while merchant solutions revenue grew 116% to $2,020.7 million. Shopify only became profitable recently. For example, Shopify's operating income for 2020 was $90.2 million, or 3% of revenue, versus an operating loss of $141.1 million, or 9% of revenue for 2019. Again, Shopify was one of the companies that benefited the most from the COVID-19 pandemic because the pandemic accelerated online commerce, especially social commerce, to several years ahead. Shopify's CFO said this: Shopify was prepared to ship the features that our merchants needed during the pandemic because we had invested for several years in a future that arrived early with the acceleration of online commerce. The pandemic forced small and medium-sized businesses to online e-commerce. Now, even after the pandemic is over, when all the retail businesses are back to normal, personally, I believe that merchants will continue to invest in online commerce. This is from the Q4 2020 earnings release. Here is management's 2021 outlook. Our outlook coming into 2021 assumes that as countries roll out vaccines in 2021 and populations are able to move about more freely, the overall economic environment will likely improve. Some consumer spending will likely rotate back to offline retail and services, and the ongoing shift to e-commerce, which accelerated in 2020, will likely resume a more normalized pace of growth. For the full year 2021, we expect subscription solutions revenue growth to be driven by more merchants around the world joining the platform in a number lower than the record in 2020, but higher than any year prior to 2020. The growth rates of subscription solutions and merchant solution revenues to likely be more similar to each other than in the recent past, as we do not expect the surge in GMV that drove merchant solutions in 2020 to repeat. As a result, we expect that we will continue to grow revenue rapidly in 2021, albeit at a lower rate than in 2020. Shopify's second growth catalyst is its increasing GMV and number of merchants using Shopify platform. Shopify's success is entirely dependent on the number of merchants using Shopify platform. And second, GMV or gross merchandise volume growth from Shopify's merchants. I want to show you this here. It shows that Shopify is increasing GMV growth, which is a very good sign. The enormous jump of GMV growth in 2020 was because of COVID-19 pandemic that benefited Shopify the most. But we should expect that Shopify's GMV growth to normalize, similar to Shopify's GMV growth before COVID-19 started, as the vaccines become more available to everyone. This is from the 2020 annual report that shows the number of merchants using Shopify plans. At the end of 2020, we have more than 1.7 million merchants around the world, reaching further economic independence with Shopify. Approximately 3,000 merchants join Shopify Plus, our subscription plan for larger and more complex merchants, bring the total number of Plus merchants to more than 10,000 at year-end. According to this article, Shopify's 5 biggest brands include InBev, BUD, which is the stock ticker, one of the largest brewing companies in the world, Pepsi, Nestle, Louis Vuitton, and even Tesla. Here's the important part. This is from the 2020 annual report. The large majority of our merchants are on subscription plans that cost less than $50 per month, which is in line with our focus on providing cost-effective solutions for early-stage businesses. While most merchants subscribe to our basic and Shopify plans, the majority of our GMV comes from merchants subscribing to our advanced and Shopify Plus plans. Merchant retention rates are also higher among merchants on higher price plans. In my opinion, even after the pandemic is over, I believe that more small and medium-sized businesses will continue to invest in online stores because they want to sell their products through multiple sales channels, including Facebook, Instagram, Pinterest, Amazon Marketplace, and eBay. I believe that Shopify should continue to benefit from this economic trend. Shopify's third growth catalyst is its international expansion in the future. If you look at this revenue breakdown based on geographies right here, you can see that Shopify still makes most of its revenues from North America, especially in the US. For example, in 2020, 66.7% of Shopify's revenue came from United States. Right now, US e-commerce market is not fully saturated yet. US e-commerce sales as a percentage of total retail sales is still much lower than China. For example, e-commerce sales in the US was approximately 14% by Q4 2020. E-commerce sales in China was approximately 44.8% in 2020. Personally, I believe that Shopify has a lot of growth potential outside of North America, especially in Europe and Asia. This is from the most recent earnings call. And third, international expansion. 2020 demonstrated just how big our addressable market is. Year-over-year GMV growth by our international merchants outpaced overall GMV growth, and our international merchant base grew within the overall mix. In 2021, we are focusing heavily beyond our core geographies to bring our omni-channel capabilities to more merchants. We expect to continue to localize our solutions in countries where we have established a foothold and increase investments in sales and marketing to bring Shopify to more merchants around the globe. But generally, our international strategy, whether it's in Asia or it's in Europe or anywhere else, is the same. We want to be the best product in the market in those geographies. And so we're not just going to simply go into those markets just for the sake of it. In the short term, Shopify is still focusing on its current markets that have the strongest position, for example, the United States. But in the long run, Shopify will continue to expand more in other core markets that have strong positions. Now let's talk about Shopify's risk. Shopify's first risk is that we should not expect Shopify to report large profit anytime soon. If you look at this financial summary right here, you can see that 2020 was Shopify's first year to generate a net profit. Now, Shopify is expected to reinvest most of its capital in its Shopify fulfillment network, the Shop app, including Shopify Pay and international expansion. Management even said this. 3 key areas of incremental investment in 2020 are Shopify fulfillment network, the Shop app, and international expansion. Similar to Amazon in the early growth stage, we should not expect Shopify to have very consistent free cash flow growth anytime soon. Shopify's second risk is that Shopify's biggest competitor is still Amazon, even if Shopify doesn't compete with Amazon directly. Shopify adopts a social commerce business model compared with Amazon's, which adopts a more traditional e-commerce online retailer and marketplace business model. As of now, Amazon Marketplace and Shopify are the 2 most popular e-commerce platforms in the US. Most small-sized and medium-sized merchants choose either to focus on Amazon Marketplace or to focus on Shopify. Not many merchants focus on both. Here are some of Amazon Marketplace's biggest competitive advantage over Shopify. Amazon has the largest customer base in the US. Amazon is essentially a search engine. Most people search their products on Amazon first before using other platforms. If you're a merchant, it's easier to have customers find your products on Amazon because Amazon, like I said before, is a search engine. Amazon FBA, Fulfillment by Amazon, is much larger and established than Shopify's fulfillment network. Now, here are some of Shopify's biggest competitive advantage over Amazon Marketplace. Shopify's e-commerce platform is very easy to use and very user-friendly. The upfront cost is also very low to start your own online retail store. If you use Shopify platform, you have much greater control over your own branding, your own online retail store, your customer relationships, your product sourcing such as drop shipping, your product management, and how you market your products through social media such as Facebook, Instagram, and even Google. The risk is that merchants can choose to invest more on Amazon Marketplace instead of Shopify to sell their products online if they find that the return on capital on Amazon Marketplace is higher. Shopify's third risk is that Shopify's revenue growth rate going forward will likely be lower than its revenue growth in 2020. Shopify's 2020 revenue growth was exceptional. Shopify had a revenue growth of 86% in 2020 because of the pandemic that benefited Shopify the most. Even Shopify's management said this: "We expect that we will continue to grow revenue rapidly in 2021, albeit at a lower rate than in 2020. Now let's talk about Shopify's intrinsic value per share so we will know whether Shopify stock is currently undervalued, fairly valued, or overvalued right now. First, I define Shopify's intrinsic value as its future cash flow discounted to the present day. If you look at this intrinsic value calculator right here, I've made several key assumptions. First, we're using Shopify's cash flow from operating activities, not free cash flow, because Shopify doesn't have a sustainable or consistent free cash flow growth yet. Shopify is still in the very early growth stage. Shopify still has to reinvest most of its capital back into its businesses, including Shopify Fulfillment Network, Shop app, international expansion in order to grow further. The second key assumption is that we're using a 50% to 60% cash flow compound annual growth rate each year over the next 5 years. The third key assumption is that we're using a 10% discount rate. This is higher than the 7.8% WACC discount rate from Finbox. The fourth key assumption is that we're using a 50 price to cash flow multiple to estimate Shopify's terminal value at the end of year 5. This is much lower than Shopify's current 350.9 price to cash flow multiple, but higher than Amazon's current 26.24 price to cash flow multiple, because I expect that Shopify's cash flow growth and revenue growth to be higher than Amazon's growth. Now let's go over each of these case scenarios. If you look at the worst case scenario right here, we're using a growth rate of 50% each year. If we project Shopify's cash flow to the next 5 years and then discount it to the present day, Shopify's intrinsic value as a whole company should be around $97 billion US dollars. And if we divide this by the number of shares outstanding, Shopify's intrinsic value per share should be around $790 per share. I'm giving this a probability of 1/3. Under the normal case scenario, we're using a growth rate of 60% each year over the next 5 years. If we project Shopify's cash flow over the next 5 years and then discount it to the present day, Shopify's intrinsic value as a whole company should be around $133 billion. And if we divide this by the number of shares outstanding, Shopify's intrinsic value per share should be around $1,086 per share. I'm giving this a probability of 1/3. Under the best case scenario, we're using a growth rate of 65%. If we project Shopify's cash flow to the next 5 years, discounted it to the present day, then Shopify's intrinsic value as a whole company should be around $155 billion. If you divide this by the number of shares outstanding, Shopify's intrinsic value per share should be around $1,264 per share. I'm also giving this a probability of 1/3. So to calculate Shopify's fair intrinsic value, we're going to multiply each of these case scenarios by each of their probabilities, 1/3 each. Based on my estimate, Shopify's fair intrinsic value as a whole company should be around $128 billion, compared with its current market cap of $147.73 billion of April 16, 2021 at the time of making this video. And if we divide this by the number of shares outstanding, then Shopify's fair intrinsic value per share should be around $1,047 per share, compared with its current market price of $1,207.8 per share as of April 16, 2020. This means Shopify share is currently around 15% overvalued at the time of making this video. So am I buying Shopify stock? Right now at the time of making this video, I don't have any positions in Shopify stock in my portfolio. I did have Shopify stock before, but I sold it because I believe that the stock was overvalued. Right now, I am waiting for Shopify stock to drop much lower than its intrinsic value before buying back my Shopify shares, because I want to have a greater margin of safety. If Shopify's cash flow can grow around 50% to 65% compound annual growth rate CAGR each year over the next 5 years, then I believe Shopify's fair intrinsic value as a whole company is around $128 billion or around $1,047 per share. All of these are only my opinions and my analysis based on my research. You will have to do your own research and do your own due diligence. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching, and I will see you in my next video.